Hey there, welcome to this week's edition of Liquid Options. My name is Eric, and I hope you'll join me every Wednesday night for a new episode right here on YouTube. And if you haven't done so already, be sure to subscribe to the channel. You can do that in the bottom right-hand corner here. And make sure you click that little bell so you don't miss anything. So in today's strategy session, we're going to start that off first. We're going to be looking at the best stocks for selling covered calls. We're going to do some back tests. We're going to look at 2 years of data. I'm going to give you like 10 or 15 stocks that you'll be able to take away with you today. After that, we're going to do our Spider Trader session. We do this every week because the SPY is the most liquid options ETF that there is. And really, you want to know what the market's doing. That kind of gives you a sense of market awareness. So we're going to take a look at that in a minute. But before we get started, let me ask a question of the week. What is your bread and butter option trading strategy? What is your favorite option strategy? I want to hear all about it. And I'm going to be hanging out in the comment section of this video on YouTube over the next few days. And I look forward to talking with you down there. All right, so let's get started. So in this week's strategy session, we're going to take a look at 10 to 20 stocks that have performed really well the past year or two, trading covered calls, where you're buying 100 shares of stock and you're selling a call. We're going to be looking at selling the Delta 30, and I'm going to use the ProScan tab of CML Viz to find those stocks. Now, and before we dive into that, I'm going to put a link to the software. I'm going to put all the stocks we're going to see. I'm going to just put right in the description. No sign up or anything. So if you just want to copy paste them out of there for later, that's cool too. So let me just show you how I came across these, and then we'll dive into a couple of them. Okay, so I'm on the ProScan tab. I'm going to do by strategy. You can see there's some other strategies here we can search by or scan by, and we're going to click. Well, first of all, let's just look at the S&P 500 stocks and covered calls, and we'll give it a second to churn these out. And you can see it returns, several pages of stocks, and the default here is by win rate. They sort by descending win rate. So you can see that Vmware was one of the top performers here of the S&P. So for the past 28 months, that's 25 wins, 3 losses. So 28 months, you had a 89% win rate, and you basically doubled your money, trading cover calls there the last couple of years. If we scroll down a little bit, you can see JP Morgan, some other, Microsoft's done pretty well. Again, in the description of the video, I'm going to put all of these stocks, any stock that had an 80% win rate or better, I'm going to go ahead and just put in the description here. Now, I don't recommend trading every single one of these, obviously, but some of the ones with really liquid options, you may want to double check. I would definitely consider Bank of America. Kind of stands out to me there. But let's go back to the first one, and let's just go into detail in one of these stocks. Let's look at Vmware. Of the S&P stocks, this one did pretty well, and this is pretty important that you understand what we're looking at. Basically, we're buying the stock, selling a Delta 30 call, and the key here is to never trade earnings. So what this software was basically calculating is if it was a particular month where earnings were being reported, you would close the entire trade and you would not hold through earnings. So some of the trades won't last as long as the others. So this is a non-earnings trade. There's no earnings risk. We would close the trade before earnings, and the data just came in here. And this is just doing 100 shares with selling one call against it. So again, we're selling the Delta 30 call, buy the stock, sell the 30 Delta call. If I go in here, you can see basically the average win was $331. That's for the month, and the average loss was about the same. But the winners were just so much bigger. So the average win was about 7%. The average loss was about 6%. So if you're looking for stocks to trade covered calls on, I would definitely take a look at this list and get them on your radar, because these are the top performing stocks, at least the S&P stocks, for the past couple of years. And if you want to get the software, you can look at the NASDAQ stocks. There's some good ones in there as well. So that's it for this strategy session. Let's take a look at the current market. So in this week's segment of the Spider Trader, let's just start with the moving averages here. There's a lot of after hours action going on, but let's start with what way the market closed today, and we'll talk a little bit about what's happening after hours with Facebook earnings and what that could potentially do. But just from a general reference, I like to look at the 20, the 50, and the 200. That's the yellow, light blue, and kind of maroon color here. And we really just are continue to sort of coil up here. There's a lot of people drawing this large triangle, which is pretty valid, and at some point this should resolve either up or down. I'm still in the camp that I think we trade in a large range, so I wouldn't be surprised if we went up or down. And the key that I'm going to be looking at is the financial stocks. And we talked a little bit about that last week, and we'll look at that again today. But let me remove these real quick. Let's just take a look at what happened since last Wednesday. And remember, I'm doing this video every Wednesday night, so I hope you guys will come back next week. But last week, we closed right here. We had kind of broken above the moving averages, and we had a little bit of pullback on Friday. And what I had talked about last week was if we could kind of consolidate here and financials not, give up the ghost, I think we could move higher. Well, Monday came and everything kind of went to a handbasket. So, I'm still in the camp that the market, when we talk about the SPY, is not going to be able to go higher, or at least much higher. We could probably retest these levels unless the financial stocks move higher too. So let's go ahead and take a look at the XLF. Now, despite the market having kind of a big pullback, that day that Friday, the day that the market started to pull back, financials were actually pretty strong, but you can see they still haven't sort of broken up. So we still have this kind of large, I hate to use the word bear flag. I don't know. I don't, I don't believe in the bear flag, and we'll save that for another episode. But anyway, this large, consolidation near the lows or whatever you want to call it, is still taking place. So financials have not given it up. One thing that could be a potential for financials to move higher is the U.S. dollar. It's kind of a loose correlation right now, but typically when the U.S. dollar is moving higher, financials would move higher in a rising rate environment. The problem we're having that the market's having is that the rates are starting to rise too fast. It already hit the 10-year already hit the 3%, and people are freaking out. I don't know. I'm not that smart, so I don't know enough about how that would actually affect everything. However, apparently if rates rise too much, which makes sense, then loans get harder to come by, and it could grind the economy down a little bit, slow it down. So there's a lot of headwinds. One of the things I've been kind of watching this week is the earnings reactions. And one of the earnings we had, I think, since last video was Goldman Sachs. And again, these are financial stocks, and that ultimately this stock blew it out of the water. They estimated 575. They came in at 695, and it's losing the 200-day moving average here. So earnings trades are not, even if stocks are beating earnings, they're not really getting rewarded. Google, perfect example, beat earnings expectations, rolled over and died yesterday. I think it was down like 5% or so, and we're kind of sitting here at the 200-day moving average. So we got to be careful here. I like to look at the ETFs to sort of get a feel if whether or not I want to go bullish or not, because you can see all the moving averages are just kind of, in this sideways choppy zone, which goes back to my original 2018 sort of prediction that we're going to be in a large range. And, I'll go back to the SPY real quick. The general plan is if we get below the 200-day moving average and we have a multi-day sell-off, I would look to sell put spreads. And then if we get above the moving averages, and I said, typically I was looking at the 20-day moving average, and I've taken that, all three, and all three trades have done well. If you're above the 20-day moving average, this is the yellow line, you get a 2-day sell-off and you sell a bear call spread, you get a little bit of a flush, then you take profits quick. Same thing here, 2-day sell-off, selling out of the money bear call spread. This one worked out better. I did the same thing over here, took profits yesterday. Now, I did lose some money because I had sold some put spreads here. I was actually getting kind of bullish. This is what I was looking at, and apparently I was wrong. And maybe it comes back, but I was looking at this level, and we did pull in here. So I sold a bull put spread. So I kind of had a small iron condor here, and I did make money on the call spread, but I lost money on the put spread. So they kind of canceled each other out. And I was like, that's okay. So we had this giant candle. Now I'm just kind of, all right, let's wait till we see what happens with some more earnings as they come out. So in general, the market is, it's just pretty choppy. If we sell off and make a new, flush lower to these levels, I would be a seller of put spreads as, volatility is kind of low right now. If it spikes back up to the, low to mid 20s, we could sell some iron condors or something. So that's kind of what I'm watching there. Let's talk a little bit about earnings after hours. I'm going to switch to like a 30-minute chart. Okay, I had to get the after hours stuff on there. So Facebook reported after hours, and they are moving up. Actually, the whole market is getting a nice little pop after hours. If you look at the NASDAQ, it's up about a little bit over 1%. Again, this is the 30-minute chart, so the moving averages obviously adjust. But Google, that's gold. Google, it's up a little bit. You're getting, even financials are getting a little bit of a pop. Not much there, but so tomorrow seems like we could have a positive day. What I'm going to be looking for tomorrow and the next couple of days is if the overnight gap holds and we do gap up, do we roll over or do we kind of start to move higher here? And it's very it's coin flip. There's really no edge in this right now except selling volatility when it spikes and playing the probabilities there. So that's what I'm going to be looking at heading into tomorrow. One other thing that we'll be looking at too is Amazon, and I talked about this in the Facebook group. I'm going to put a link in the description about the Facebook group as well if you haven't joined already. I put this trade on today. This is more of an earnings trade. The options that expire this week, so there's only a couple days left. I sold the 1350 put and I bought the 1345 put. I collected 75 cents, and it was really kind of an earnings trade. And with the idea that once the volatility gets crushed, then as long as we're kind of hanging out above 1350, then that would be a profitable trade. And if it moves higher, then I can let it expire worthless. The expected market makers move, we go into the option chain, is about $85. When I took the trade, it was about $89. So I looked at $90. So at the time, I mean, it was trading a little different levels, but $85, if you subtract that out here, that puts you about 25, about 1375 where the expected move is. And I'm trading just outside at 1350. A lot of times you can wait for that trade until the day before, but given that Amazon had already sold off so many days in a row, and then we started to put in this little bit of a tail, I said, okay, well, let me go ahead and put it on today because it could very easily rally into earnings and then kind of anybody's guess. So I'm going to be watching Amazon earnings tomorrow. I believe it's tomorrow after the bell. As long as we kind of trade sideways or maybe moves higher, then that would be a good trade. And then, like I said, there's a lot of sitting on hands and just kind of waiting to see what happens because the market continues to coil. Good news is not being rewarded when it comes to earnings. So, I think the 200-day, if we sell off, I don't think it's going to go much lower just because the economy is doing pretty well. There's still a lot of things coming out of Washington with trade deals and stuff. So anything could kind of, negate what I just said. But really, we're taking it one day at a time. And that's all I got for this episode. So don't forget to hit the little subscribe button in the lower right-hand corner here. And again, I'm going to be doing this every Wednesday night. And until then, I'll see you guys in the Facebook group. Don't forget to check the description for all the other resources, okay? See you next week.